Thanks, Dalton.
Is this Google Slides right here? Or was it a PowerPoint?
No, it was just a PDF. Yeah. That's it.
That's it.
And here's my clicker.
I think, oh, it's just a PDF.
Yeah. So it should be able to go into full screen mode. But I can just come over here and toggle down.
Oh, no, you're right. You got the
Okay, perfect. It's not up.
How come it's not? Do I have to slide it over? Oh, there it is.
There it is.
It's kind of hard with a mouse. Okay.
Well, thank you, Dalton. Good morning, fellow Toastmasters, and welcome guests. My name is Mathew Sloan. I have been an executive chef for about 20 years. A lot of it also was a restaurant consultant, helping restaurants understand their numbers and their profitability. My goal today with you guys is to talk through a little bit about restaurant accounting essentials. Most importantly, talking a little bit about the profit and loss statement. Now, when we think about a profit and loss statement, I really just want you to think of it as a scorecard. Now, in your restaurant, you sell things. You sell food, you sell beverages, you sell alcohol, experiences, and space. All of these revenue drivers are coming in over here, a big bucket. This is where you make money. Now, balanced against all of that money are your expenses. Over on this side, we have, obviously, to buy everything that we just sold, but we also have to pay rent. We have utilities, we have lights, we have to-go boxes, cleaning supplies. The list is never ending. And these two buckets are competing against each other. And in the middle is what's left. You either have a profit or you have a loss at the end of the month. Now, understanding how these pieces are going to impact you really comes down to organization. Because as you think about all of the pieces that are coming in, this never-ending balance between your revenue and your expenses, how you're able to see everything is going to determine whether or not you make money. So I'd like to share a $100 example with you. This was shared with me 25 years ago, and it really clicked for me. If my restaurant today has $100 in sales, we probably had to spend $35 on the food, the booze, the sweet tea, the lemonade, all of those pieces. Our cost of goods is probably 35%, very reasonable. And the people that we have, probably gonna cost another $32 with the salaries, the people clocking in and out, the taxes, the workers' comp, 32% labor costs. It's very reasonable. Now, these other two floating pieces that we have are our controllable expenses and our non-controllable expenses. Non-controllables is going to be fixed expenses, things like your rent, your manager salaries. What does it cost to open your business every day before people come in? But the controllable expenses are going to be things like your linen and laundry, to-go supplies, your cleaning stuff. Now, when I say organization matters, everybody uses QuickBooks. QuickBooks is a very common accounting software for most businesses. But I say that carefully. For most businesses, if I had a tattoo parlor, if I had an acupuncture studio, if I had a grocery store, I could use QuickBooks because QuickBooks is for business. But there's a few specific things that you want to do with your QuickBooks to help make it specific for your business, to organize you in a way that's going to be meaningful and make sense to you. The biggest way I talk about quickly today is in these controllable expenses. Now, there's a nasty little category, and it's called supplies. And over time, supplies can start to catch a lot of things. Your linen and laundry, your to-go supplies, your cleaning stuff. But at the end of the year, if we're looking at this $100 example, and we're not happy with the amount of money that we made, it's human nature to go to the biggest piles, right? Food, $35 we spent. We're going to tear the kitchen apart if we're not making money. We're going to try to fight and understand why we're not making money based on food. 35%, it's a reasonable place to be. Your problem's not there probably. The next biggest pile of money going out is labor. We're going to think at people. Everybody's seen restaurants where they're making cuts. They're letting people go early. They're trying to shortchange the experience to save the profit. But these controllable expenses, again, that one category called supplies, if you spend $13 or $14 in there, you're never even going to look there. You're going to say, my problem has to be in these two big piles of money. But those controllable expenses, those supplies, they should only cost you $9 or $10. You're never going to look there. And even if you look there, you're just going to see one big category called supplies, where if you had broken this up into several pieces, your to-go stuff, your cleaning supplies, your linen and laundry, you'd have a good idea of where to look. That's what a profit and loss statement should help you with. It should help you understand your business so that you can clearly see how much money are we making over this period of time? And when our expenses are all tallied up and everything shakes down, what are we left with? That middle portion there, the profit or the loss. So I'm going to leave it with a quote from one of my favorite childhood authors, A.A. Milne, author of Winnie the Pooh. He says, organizing is what you do before you do something, so that when you go to do it, it's not all mixed up. I think that's a really good quote for the restaurant world. Thank you for your time today. Have a great day. Thanks.